Today, I should start by saying is a very big day for credit unions all over the world. It's actually what we call International Credit Union Day, and there's something... Thank you, Sally. There's not a huge number of us in the audience, I can tell, but Sally and I are on message. And so about all over the world, something like 190 million people celebrating International Credit Union Day. It's also particularly big for us in the UK, because some of you may know that today the House of Lords is having a debate on our new legislative reform order. Some of you who've maybe heard me speak in the last 5 years will know just how depressing a journey it has been in that 5 years to try and finally get over the line a piece of legislation which will probably transform our sector. It will give us a law which is on a par with credit unions anywhere else in the world. And in fact, I think some Treasury folk were due to be with us this afternoon, but I believe they're actually sort of over in the House of Lords now, making sure that ministerial speakers have backup and all of the things that need to go on. So a very big day for credit unions, and that law, which I'll say a little bit about in a second, should be enacted by Christmas now, and credit unions able to use that, and the power and the FSA able to sort of regulate from that basis into the new year. So that's really excellent. So I'm going to say just a couple of things, because there is only Sally and I here, probably from the credit union sector, just to give you a little bit of a pen picture of where the credit unions are now. A gentleman there at the back. A little bit of a pen picture, and our approach to the regulation, changing regulation framework that Martin set out for you. The growth in credit unions in Britain at the moment is pretty good, actually. We're over 900,000 members now, looking after something over 700 million in assets. And come March, and I know this is a challenge for Martin's team with the regulator, we'll also be joined by 450,000 more people who use credit unions week in, week out in the north of Ireland. So the sector will quickly have one leap to about 1.4 million people. So the growth is good in the sector. Our asset growth is over 20%, membership growth over 15%. The real challenge for the sector is actually around sustainability. Unlike many parts of the credit union world, where credit unions are a big part of the landscape, credit unions in Britain are much more mixed in terms of their financial health. And indeed, a number of our 300 members in the association, in ABCUL, will actually have some degree of dependency on public funding. So one of the big priorities for the association is not just lobbying Martin and his colleagues on all of the different things that are important in the new regulation, but trying to make sure that a number of things are in place to help the sector put itself on a more sustainable footing. The legislation, which I mentioned there before, is one of those two big things. It's something that will make a massive difference to the sector, both in terms of how easy it is to join a credit union. We'll also be able to take organisations into membership, and actually we'll also be able to pay interest on savings. And if you think one of the primary challenges for our sector is to encourage more people to save with us on a range of incomes, not being able to historically pay or promise people an interest payment, but only being able to give them a dividend in retrospect has been something of a barrier, we believe, to growth in the sector. So the new law is key. The other engagement I've had today is a meeting with Ian Duncan-Smith, Secretary of State, DWP, looking at the present government, the present coalition's commitment to help modernise and expand the sector. And arguably, it's at least as exciting, if not more exciting in some ways, than the legislative reform order, that actually within a few years' time, we might take a leaf out of cooperative banking sector, credit union sectors around the world, and actually start to work together a bit more closely. Technically, the sort of back office integration is the jargon, in terms of delivering some of our services a little bit more collectively, behind the scenes at least, doing some of our processing together, doing some of our deposit taking together, a whole range of operational services. And the present government has said, if you can persuade us that actually we can make a one-off investment here, not an ongoing revenue subsidy, but if you can persuade us to make a one-off investment, then actually we will back that because we absolutely believe and see what the benefits of a strong credit union sector can bring. So that's where we are. What do we think about the new regulatory regime? Well, for us, it's still very early days, really, in terms of our own regulatory history. It's actually less than 10 years since credit unions had any effective regulation at all. I mean, we were sort of wholeheartedly enthusiastic about the FSA arriving because prior to that, we didn't really have any regulation at all. I know in different parts of the financial services industry, there was a much more mixed sort of welcome to the FSA. But for us, it was fantastic. And I have to say, generally, and I tip my hat to not just Martin's team, but Jeremy, of course, used to be policy at the FSA as well, have done a fantastic job to make it proportionate and it possible for credit unions with sort of less than 500 members, all the way up to credit unions with 25,000 members, to participate in a regulatory regime which is proportionate. So, by and large, good experience for us. And we, in fact, I think it was largely Jeremy's team, developed for us a specialist source book which sits within the overall FSA handbook, which allows credit unions to have pretty clear information about what you can and can't do, and doesn't require a small credit union run only by volunteers to have a high-level discussion about principles and working that through into practice. It's actually quite powerful to have some simple rules there. So having had a good experience, what do we think of the new regime? Well, I think broadly our concerns are still the same. In summary, they're three. We think that proportionality needs to be maintained. Some of that is about making sure the law enshrines that. Some of it's about what happens operationally as we move forward in the different bodies. Because we're deposit takers alongside the building societies and the banks, of course, we're in both bodies. And as Martin said, one of the challenges for our members is how to cope with having to suddenly report to two bodies when you used to report to one. Not particularly that the thresholds might change or that the level of requirement, but just simply having to deal with two bodies when you're a small credit union is actually going to be quite onerous. So we're very keen on things, for example, like having a single gateway where all the passing of the book happens between the two bodies behind the scene and we only have to deal with one face. I think it's something we're quite keen on. Cost is very important to us, and we've noted already the rising cost of the proposals. And there's two challenges for cost with credit unions. One is that we, unlike most firms, don't have the ability to pass our charges on to our customers, to our members. Because we're the only group of organisations in the country that have a limit on our lending, and lending is most of our source of income, if you're a credit union that's doing, 2/3 or perhaps most of your lending at our maximum interest rate, suddenly being hit with a bigger bill from the regulator can't be passed on to the member, can't be passed on to the customer, even if you'd like to, because you're at the limit of it. So there are some particular challenges with rising costs of regulation for credit unions. And I think the other thing, which isn't really particularly Martin's headache in the same way that we're very concerned about, is the rising cost of the other part of the regulatory framework, not just the PRA and the FCA, but actually what's going to happen to the financial services compensation scheme and how much a credit union is going to be expected to contribute to that as well. And I think our third concern is probably echoed, I would imagine, by our other speakers today in terms of diversity. And we think it's important, presumably like most of us here today, to have a diversity of ownership structure. But also, and we're very proud of this, credit unions also represent diversity in financial services in terms of not just serving the mainstream customer. Yes, we're happy to serve the mainstream customer, try to do as much of that as we can, but we also make sure we serve many people that aren't particularly well served by other businesses. So I think I'll leave it there for now and give other people a chance to contribute. Thank you very much.